Hey, good afternoon, everybody. This is Dennis Wilmer with the Active Trend Traders. I want to welcome you to this streaming video that we do typically every Monday. It's called the Art and Science of Active Trend Trading Update. I want to thank you for joining me today. If you're joining me live on Facebook, please do me a favor. If you like the content, please give us a thumbs up and a big like. And also, if you would like invitations to future videos of this type, streaming videos and live presentations, just start the comments and you'll have a place where you can sign up for, leave a comment, you'll have a place where you can sign up and it will notify you when we are going live in the future. So let's get on with the presentation. Welcome to the Art and Science of Active Trend Trading update. This is the 3rd of December. 2018. We're into the last 4 weeks of trading for the year. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always paper trade prior to the risk of their own personal capital. Our motto at Active Trend Trading is to do 3 things. 1, clarify, simplify so that we can all multiply our accounts and just basically continue to grow our profits as time goes on. Here's where we're sitting as of, just before the close. We're up about 32% for the active trend trading system. All the indexes that we follow are up for the year. Russell's kind of bringing up the rear, followed then by, of course, the Dow and the S&P. NASDAQ, the tech stocks doing really, really well. Let's take a real quick look at the charts, and to do that, I'm going to basically take my video off. Let's look at the charts that we're, okay, here is a picture of the S&P. Now, what happened over this past weekend? Very interesting. One, the Chinese and U.S. came to an agreement that we're going to postpone doing any more tariff or trade wars for at least 90 days. That held off on increasing some tariffs on some Chinese products by up to 25%. And so it was viewed as being really, really good for the market. But look what happens. Here's what I kind of like find, and I talked about this last night in the one of the premium videos we do for our premium members. I said it was looking like price actions were going to jump right into past resistance, and that's exactly what happened. So in reality, what do we have going on here in the S&P? We basically have what could be a double bottom type of formation. We break out above this line here. We're probably in the green, or basically have a green light to go on up to the past highs, about 290 or so. And how far would that be from current levels? That would give us approximately 4 to 5% from current levels. The down, well, I won't say the downside, but the thing that gives me at least some caution is this looks more like a hanging man type pattern. Isn't a perfect hanging man, but as you can see, we gapped up to the highs and then basically sold off. Now, if we hold, this is the 100-day moving average right here. If we hold that, there's a good chance that we'll continue to move higher. So right now, I will want to look and see on the S&P, do I get any type of pullback into these others, this spaghetti mess of moving averages that are down here about 275. So that's what I'm looking at for the SPYs. The Qs, a similar type of situation, gapped up. Really, look at, we have broken above the trend line. That's a positive. At the same time, we broke above it right into some significant levels of past resistance made up of the 100, 200-day moving average. And we have in place for the day, at least, a hanging man type of bearish reversal candlestick. Now, again, the candlestick, the bearish candlestick tells us that yes, we are at a place where we expect a reversal. However, it doesn't tell us how much. How much could we reverse down from this and still, be triggered up to the upside? Well, if we pull back into the moving averages or even pull back into this trend line, oftentimes from a technical standpoint, we'll pull back in, kiss the trend line goodbye, and then we bounce from there. Remember, we're anticipating somewhere during this time frame between now and the end of the year to get at least a partial Santa Claus rally. And so this may just be the initial thing about it. What would have made this particular move better was if we would have gapped up above the moving averages, similar to how we did with the spiders and the S&P, and held above the 100, 200-day moving average. IWM has been the poorest performer this year. With the hold off on tariffs, that should benefit the small caps. And if that does, we'll look at, again, hanging man, not quite a dragonfly doji, but right now in between the 34 and the 50 period moving average. Let me put on my, it's telling me that this makes it a little bit easier if you can see my pointer. We pulled in right between the 50-day moving average, this 155 level, that is a level of strong resistance, and the 34. Again, hanging man type of bearish reversal signal. So that's what we're looking at for that. A couple of the entities we'll just keep our eye on. We've been watching oil, USO. This is the non-leverage ETF for oil. And as you see, we are getting a potential bottoming type of movement in that we have popped back above the 8-day moving average, which is good. However, and also on a daily chart, got a reversal here, positive divergence. And look what's going on over here on the, oh, I got that. There we go. It appears as if, at least on a weekly chart, we're starting to get some reversal on the TSI. So we want to be waiting for that to happen. Excellent 3-line cluster here on the market forecast for a weekly chart. That typically means that somewhere between 1 and 4 or 5 trading periods, we can expect a reversal back up. Now, this was a huge sell-off. How far could we expect it to move back up? Well, just lay a Fibonacci across here, measure where the 50% retracement is, and somewhere between 30 to 60% is where we'd expect the retracement to go, which would probably be right back, it would be back up here above the these moving average. So I put it up about $13.50 to $14. The other one we're going to take a look at is, again, I'm not going to be doing a lot on oil until after the OPEC meeting. Right now, what we're seeing is a little kick up on oil. I think the anticipation is that oil will, they will tighten the supply and tighten the production of oil at the OPEC meeting. A couple other stocks just keep an eye on. BABA is pushing higher, as we can see here. Again, it's getting a positive result from the trade talks, but now it's gapped up into past resistance. So look for, this isn't the entry. I'm not going to buy this, bearish looking candle. I want it to bounce back down against the moving average clusters. That's where we'll look for the pullback. What else we have? Baidu is another one of those Chinese stocks that we that could start to do something. However, what we're looking at here, 180 to 175 support. Didn't quite get as much juice coming back up through the 50-day moving average. Ran right to the 50-day moving average, stopped. Anytime I see that after the market has been in a, somewhat of a downtrend, it gives me at least a moment to pause and say, wait a second, this isn't acting like a strong market. Now, it may need to repeat this several times before the momentum really kicks in. but it is looking like, hey, we're getting closer, we're getting closer, we're getting closer, but it's just not there yet. So again, not in a buy position yet, but it's looking interesting. Let's see, what else do I want to talk about real quick? Okay, the last thing I will just leave you with is, well, I'll go back over to, so that's what I'm looking at going forward. Folks, I will, that was a chart. I want to remind you that, hey, we are currently having a special on our membership. This is our premium membership for the active trend trading service. And you can jump on board, save 40%. I don't know how long this offering is going to be in place, but here is the website where you can join. And it has a password protect bonus, and that's capitalized, all capitalized. So I want to highlight real quickly the weekly update video. That's what we're doing right now. The rest of what we do with this is I want a tracking index update. We've done that. Potential buy points on LABU, LABD. There are none. We basically bounced, and so we're waiting for new ones to set up. And other things driving the market. I want to cover real quick the tech mechanical tip for the day and for the week. Decision. Be ready for the strongest signals. And what does that mean? Well, be ready for, be ready at the extremes is what that basically means. What we find oftentimes, because we like to trade the TSI, we like to trade the market forecast, and one of the biggest challenges in trading those two, trading off of those two indicators is patiently waiting for the reversal signals. Because it's so often easy to just jump right in too early, and that's normally the part of it. You're in too early, and then you have to suffer the heat while you're in that trade, and sometimes you get whipsawed out. So be patient. Let's check out what LAB, we've had this chart up before. LABU, love this entity. It repeats these huge moves on a yearly basis. That's one of the reasons why if you are a premium member, you will get triggers on LABU, LABD, and our 7 other Magnificent 7 ETFs. But here's the moves that it makes. You can see 5 runs, 2 years, average 7.76%. And I'm not saying we're going to capture all of this, but if we can capture, like half of the move, that's pretty darn good return on a yearly basis. But here's what I'm talking about, the extremes. It's when the TSI gets to the oversold condition. It's when the market forecast gets down here, at least the 2 line gets to the oversold condition. That's where we want to be paying attention. When you get a double bounce, double bottom, if you will, and it goes on to a big move, that's where you want to be paying attention. Oversold, pay attention. Oversold, pay attention. And on the flip side of that, if we're trading the inverses, when a non-inverse gets overbought, be paying attention because that'll give us a great opportunity for the inverse. So, okay. If you look on the website, as you're getting the post on this, you will find our composite list that we did up on December 1st. This includes all the stocks that are on all 13 premium IBD lists, sorted by the number of times they appeared on the list. It's great for knowing which one appears to be the most popular, therefore maybe getting the most buying power. And then we have 2 other watch lists that I have on there that are derived from some of the work I do on the IBD watch list. Crude oil, remember, we're at that time of year where we could be getting a bounce in crude after we've sold off pretty dramatically. Isn't it interesting, seasonality-wise? Crude started to sell off at the end of October and completed it at the end of about the first part of December. So that really wasn't that unusual, and it brings home the fact that we need to be paying attention to the seasonality. Same thing with Russell. Russell tends to get a Santa Claus rally, and we're looking to be taking advantage of that. If you have any questions, please contact me there's my email address, dw@activetrendtrading.com, or you can join us at facebook.com/active trend trading. It's not Thanksgiving time anymore, but we always are very thankful and thankful for our members out there. So until next time, I'm going to sign off and say aloha. Aloha and God bless everybody.